Good morning, ladies and gentlemen. A very warm welcome to you back on Business Today Television. We continue with our coverage on excellent fourth quarter numbers from corporate India. And in this connection, we have the management of Kaynes Technology Limited joining us. Let me just share the numbers with you. Net profit for the fourth quarter for this hardware maker of electronics and many other products rose 43% to 116 crore rupees. Sequentially, also the company reported a very high growth in fourth quarter profit. Sales surged 54% to 984 crore rupees on year. EBIT rose 76% to 168 crores. Kaynes reported a rise in operating margin because of better product mix and of course raised its guidance. We are now joined by Mr. Jairam Sampath, who's the CFO at Kaynes Technologies. The company has 8 plants, serves customers in the automotive, industrial, railway and aerospace, and it's my pleasure to welcome Mr. Sampath to the discussion. Namaste Jairam ji. Please explain how this stunning rise in sales and profit came about in the fourth quarter.
Sure. So, thank you for having me, Mr. Bhatnagar. I think this has been a good run for last 9 quarters or so for us. And in a small mention about what are the tailwinds which help us in the marketplace, it is basically the Atmanirbhar Bharat plank on which the government has done a lot of direct and indirect measures to make sure that electronic business grows in India. The other thing is also the fact that we have waited for almost 34 years before we took off. So that means we were preparing our customer base, our abilities, and our competencies in different areas. So, firstly about the quarter, typically the fourth quarter is a quarter which is pretty highly loaded. The reason being it's also the year end for the most of the corporates and government for completing the budget activities, etc. So in our business, almost 50-50, that is 50% is direct result of consumer buys. Another 50% is a result of, we don't ship to government, but our OEMs do. So our customers' business also goes up in the second half and especially in the last quarter. So typically second half Q3 and Q4 are large quarters for us. Yes. And
Okay.
so I think, go ahead.
Please continue.
Yeah.
So, your turn, sir. You are the hero of the show. Please continue.
No, thank you. So fundamentally, our order book has also surged to about 6,500 crores or so. And the order book growth is at about 80% on an annualized basis. So typically the order book always will lead the sales growth and in a growing company. So we think that last 5-6 years we have done a CAGR of 50+%, and we think that there is enough, let's say, enough business in the marketplace, demand supply gap, and specific demand for our services to take us for next 5 to 10 years time frame, something like a 50% CAGR.
Okay. Ladies and gentlemen, let me just explain a little bit about Kaynes Technologies. This was an IPO that came in November of 2022 at 587 rupees. If you look at the price now, above 5,500 rupees, this is a 10x. It's a multi-bagger in the last 2.5 years, and that's driven mainly because of the kind of incentives that the government of India has provided in the PLI space, and of course the fantastic work the company has done in electronic design and electronic manufacturing. Remember, Kaynes Technologies is not a code writer like Infosys or TCS. They manufacture products, they design them for spaces such as railways, aerospace, which is the IAF, as also the industrial and the automotive space. Mr. Sampath, can you please explain how many customers were added in the quarter gone by? What is the new business that you have won?
Yes. So typically, we at any given point in time, we work with more than 250 different clients. The product count that we manufacture is about 6,000, and input components are about 250,000. It's a complex, let's say, business wherein there is a large variety. That's something that we are used to. Each of these clients, typically, if you see, will have several tens of products being made. So for the last year, if you see the Q4 and Q3, the major client addition was Iskra, which fortunately we have also acquired as a subsidiary today. So they are into smart meter business. And then, of course, there are many other clients. I'm not able to name them because I don't have consent, but they are in the aerospace area. They are in automotive area. Largest, let's say, tier one vendors in the Europe has become our client. One of the largest two-wheeler manufacturers in India has become our client. And of course, Iskra, which is a subsidiary of ours, has become a client. In aerospace area too, one of the major, let's say, supplier and technology leader who provides the solutions in avionics to aircraft manufacturers, they have become our client. And of course, CDAC business also we did last year. So there has been some of these businesses which are driving the growth with large volumes, and they continue to do that this year too. And typically, what happens in our kind of business is that since we are working in 6 different verticals, so today 4 or 5 of them are firing up with on all cylinders. So we would certainly see a fair good track for the next few years.
Okay. Ladies and gentlemen, by no stretch of imagination is Kaynes Technology an inexpensive share. Look at the price to earnings multiple, it's 130. Look at the book value around 500. So it's easy and 11 times book that what is treating. But shareholders are paying for growth and they are paying for expansion in operating margin. Let me just share that number with you that Kaynes has put up. At the moment, the operating margin is somewhere in the vicinity of 17%. It's risen dramatically from 13% what was in June 2024, and this has come at a time when compounded profit growth over the past 5 years is 97% each year. So this is the reason why the stock is so expensive. Mr. Sampath, looking ahead, what are the other capacity expansions that you are planning? Are there any other verticals that you plan to add which might fund such prolific growth?
Yes. So we had earlier also announced that we have an ambition of reaching $1 billion in turnover by FY28. That's like we assume that it will be about 9,000 crores.
Okay.
And I think we see visibility. We have added 2 new businesses to our fold. One is the semiconductor assembly or OSAT business, for which we had raised some funds for equity, and then government subsidies are there, 70% government subsidy on eligible capex, etc. And then the other business that we have started is the high density interconnection PC board fabrication business. So these 2 businesses, the total capex in these 2 businesses is about 4,800 crores. And these businesses will come on stream in terms of commercial production by the Q4 of this year. And we think that by FY30, these businesses will probably reach 80% capacity utilization. So we can see excess of 5,000 crores of additional business in FY30 just on account of these 2 different, let's say, type of businesses. Our existing businesses, in terms of vertical, there are 2 dormant verticals if you see. One, which is the defense, also called strategic electronics. We have approvals from most of the prime contractors, and I think Government of India has now become a little more careful, and they want to invest more into defense and especially electronic defense. So I think we probably will get, we are one of the players in manufacture of electronics, so we'll get something there. In telecom also, I think government has now probably over next couple of years. So in FY27, you will see good growth from these 2 verticals too. In addition to all this, we are also mindful of the fact that most of the countries across the world, they are becoming a little more insular, right? They want manufacturing to be done in their own countries and so on. So
Yes.
in order to cater to the local demand, we have a strategy of acquisition of factories which we think we can manage and which is synergistic with us. That means it gets us new markets and it's profitable business and so on. In the North American geography, recently we acquired a company called August Electronics in Canada. Similarly, we will do more. East Europe is another target area and South Asia is another target area. So geography expansion will be the next boost, and by FY30 we think, which is when we probably will inch towards our second billion. First billion came in 40 years, second billion will come in 2 years. That is FY28 to FY30. So out of that, 15% business will come from outside the country. And we are also cautious about making sure that when we grow our volumes, our margins should also see an upward movement. So in order to do that, more value addition in terms of either manufacturing or design. And so we are going to invest into acquiring ODM companies, own design and manufacturing companies. We have done some experiments in the past and we've been encouraged. We acquired a company called Sensonic, and that's a design-based company. So, and manufacturing, of course. So we think that this dual strategy of growing the business outside into new beachheads like new geographies, plus adding more margins through our own design and manufacturing will certainly help, and also value addition within manufacturing itself. We want to be a high-tech company. So we don't use labor arbitrage as our strategy, but technology leadership as a strategy, so that we are kind of future-proof. Because in our business, eventually we have to compete with people who are high-tech companies.
Mr. Sampath, for the 8 manufacturing plants that you have, what is the capacity utilization as of now? And how have working capital requirements moved? I believe they've improved in the last quarter, and therefore you had a higher OPM.
Yeah, so two different aspects, but they are linked to each other. The first question is how much capacity utilization. In our business, we have to show some spare capacity so that customers can have confidence that we'll be able to supply to their demand. So typically, we look for new facilities the moment we reach the 70% mark. We've not yet done that. If you see our asset turnaround, it's about 4. We can take it to about 6. That means there is a hidden 50% capacity available in our own factories for the EMS business, which we are trying to exploit this year and the next. In terms of working capital, currently we are not as good as what we think we can be. At a net working capital of over 87 days, we think that can go to about 70 days by end of this year through concerted actions on receivables front, like factoring services, etc., and also inventories by improving, let's say, our relationship with our vendors and making sure that they keep stocks ready for us rather than we take all the burden. And also the third element is payables. We don't generally touch payables for that. So efficiency improvement will also probably lead to lower inventories and so on. So we think that over next 1.5 years time frame, we get into about 70 days of net working capital. So that improvement itself will throw up at least half a month or close to a month worth of, let's say, money, which then again can fuel, let's say, growth. It will add to the cash flows and so on. So we are looking at, but the only thing is during any growth phase, the inventory figures go a little awry, but we are now mindful of the fact that unless we get that under control, the ROCs, etc., will not be very high. So our target of ROC is somewhere between 22 to 25%. And I think this year when we exit, we should get there through both improvement in profits as well as reduction in working capital.
Okay. 2 points I wish to raise and one to confirm. In 2 years from now, so we are in FY26, FY28, end March FY28, Kaynes Technologies will have $2 billion worth of turnover. Am I right?
No, FY28
you just said that.
will be 1 billion. FY30 will be 2 billion. FY28 is 40th year of our existence. That will be 1 billion. And FY30 will be 2 billion. So
Okay.
like I said, 40 years for the first billion, and next 2 years for the second billion.
Fair point. Okay. And what would be profit and what would be profitability at that point of time?
Yeah, so we think that there's an upward movement in profits which can be sustained. So EBITDA numbers will be anywhere between 15 to 16.5%. And the reason is that the newer businesses that we are talking about, like the semiconductor assembly and the PC board, high density PC board fabrication, are at a somewhat higher numbers. So I think both at $1 billion and $2 billion, we should be nearer to between 15 and 16% of EBITDA. Maybe we'll even reach that 16% some point in time.
Okay. Of the four major verticals that Kaynes works with, that's automotive, industrial, railway, and aerospace, which are the two biggest ones?
Yeah, so the two biggest ones are industrial and EV is the first one, which is anywhere between 40 to 50% of our business, more like 40% in the long run. And then second is automotive, which is about 30% of our business. And then, of course, the other things like aerospace, railways, and then IT, etc., they'll all be 10 to 12% each. And then medical is a smaller segment for us. We are happy to be at some 4 or 5% at this point in time of the total sales. Yeah.
Typically, typically for the aerospace division, is there anything that you do for the IAF?
Yes. Okay. We are not at liberty to tell you, but for the light combat aircraft, we had done a lot of work with the facility in Kerala, Kasargod. So it included some uh, internal wiring harnesses and so on and so forth. So Indian Airlines, Indian Air Force buys these aircraft. So we have approvals from all of these companies, like Dassault Systems and also the American company. So when they come here, we can do MRO for them, and then we can do some little bit of electronics production for them at this point in time. So defense, our output of defense is linked to government's investment in defense.
Okay. For this capacity expansion, Mr. Sampath, would you require additional funds? At the moment, promoters own somewhere in the vicinity of 58% equity in Kaynes. How are you planning to fund this expansion?
Yeah, so as far as the existing businesses, which is the ESDM and semiconductor assembly and PC board fabrication is concerned, we have already funded these businesses and they can probably fund themselves for their growth. For the inorganic acquisition, which is like the geographical acquisition in the US and also adding ODM firepower to our portfolio, plus certain, let's say, manufacturing technology related expansions, we need to raise funds. And we have shareholder approval for a QIP, recently obtained approval for about 1600, up to 1600 crores, which we will be actioning shortly.
Mr. Sampath, thank you so much for this wonderful conversation, and it's a great learning experience. EMS, EDMS are two spaces that are growing dramatically in India. Both of them are visible in the kind of profit growth and sales growth that you are putting in. Here's wishing you all the best, and hoping that this very sharp increase in capacity utilization that you are planning will be as beneficial to shareholders as the previous ones have been. Thank you for being with us.
Thank you, Mr. Patnagar. It was a very insightful discussion. Look forward to talking to you again sometime. Have a good day.
Yes, we'll be doing a regular check on you every quarter. Have a nice day, Mr. Sampath, and of course, all the very best for the future. That, ladies and gentlemen, was the CFO, Mr. Jairam Sampath at Kaynes Technologies. The company is an EMS, EDMS player. It essentially is not a code writer. It is into manufacturing of very high-end products, as also designing them for the aerospace, industrial, automotive, and the railway sector. Profit and sales have surged dramatically. They have raised their guidance. They are looking forward to maintaining and increasing their OPM based on lower working capital requirement and better management of finances, and more importantly, two new capacity expansions, one in the semiconductor space and the other in the printed circuit board space is coming up. They should be operational by the end of this financial year. Thank you so much for watching. Continue to be with Business Today Television. There's a lot that's happening on the other side of this break.
Hello and welcome to Business Today Television. I'm Karishma Sudani and joining me is Secretary Deepam, who is Mr. Arunish Chawla.